Hello traders, this is Dimitrios Charalampidis from Snail Trading, and in this video I'm gonna show you our updates on our Elliott Wave counts on the instruments that we cover. Today we expect some important macroeconomic releases from Germany, New Zealand, but mainly from the United States. We have GDP release, existing home sales. Also, we expect the API weekly crude oil stock, which we expect to bring some volatility for crude oil. So we decided to create this video to show you our expectations about all the instruments that we cover. So let's move on. We start with gold. This is our main chart for gold. This is the decline that moved. This was a very sharp decline that moved prices lower, and we hit it almost the $1,000 level, the psychological level. Then we had a sharp bounce and choppy decline, and again a sharp bounce. This pattern here looks like an ABC correction, but we need more information. We believe that it's not finished. First of all, the 100% projection of wave A from wave B would be forming a flat correction here around the levels of 1087, 1088, 1090, let's say. And we have to wait for this to happen to see the reaction at this point, and if we get a very sharp reaction to the downside, then we will be trying to find if this is actually a wave 4, so that decline 1 2 3 4 5, and we have just one wave down and then a bigger correction to the upside, or this is the 5-wave decline is already finished here, which we believe that it is, and we have an ABC correction here for B, and then another 5-wave decline to the downside for gold. We move to the daily chart to see our expectations. We have a very large ending diagonal here that is forming. We believe that this was actually wave A. This was actually wave A of the 5th wave here. And if this is wave B finished here, we would see prices moving lower until probably hit the $1,000 level or even below that. But for now, we just stay aside and watch how prices are developing, and we need to collect more information in order to understand if this is actually wave 4, which will bring another wave down, reach this lower boundaries of the ending diagonal wedge, and then a bigger correction to the upside, and then move down. Since later today we have the API weekly crude oil stock, we expect some volatility to the crude oil futures, and we're gonna start here from the daily chart to show you what are our expectations, and we can even move to the weekly chart to see what's going on here. After this enormous decline back in 2008, we had, according to our count, we had an A, B, C correction, B to the upside. This was wave A to the downside. And here we expect a 5-wave move to the downside. We already have so far 1, 2, 3, 4, and we need this wave to finish the downside, and of course after that we expect much higher prices in the coming years. So there is a big there will be a big support around this level here, the $33 level, which was was the low of 2009, I believe it was. Yes, it was January 2009. And so far we have 1, 2, 3, 4, and we are in the process of wave 5 development. In the daily chart, you can see how this pattern here looks like an ABC, ABC, ABC. So we expect that this will be an ending diagonal. It has already broken the low of wave 3, and we see the reaction exactly at this point. And we're going to the 4-hour chart and see how the internals of this wave 5 are A, B, C for wave 1, A, B, C for wave 2, and A, B, C, we believe, for wave C of 3. So if this will be the end of wave 3, we cannot say, or if we can see lower prices before that, but sooner or later we expect a bounce that will move prices to higher levels. And if the ending diagonal pattern is correct, we would probably see something like level of 40 to move around those levels here. The bottom of wave A should provide a lot of resistance, and it would also make a lot of traders think that the downside is finished, and they will enter long the market only to be surprised when prices drop again lower, creating let's say a bear trap. Moving on, we're gonna see now our chart for the Australian dollar. We expect later today some releases from the New Zealand trade balance release is the most important, and what we believe that is happening here, we're experiencing a complex correction in wave 2. So what's going on here? Let's take a look. It is really difficult to say if those two waves here, where to put them, but we have a 5-wave move down here, and after that a lot of overlapping waves. It is probably something like of an expanded flat that is forming. So it is either wave a wave 1 here, and this will be A, B, and C, and somewhere here or even lower. It can happen somewhere around here, and then move lower from here. The situation is like that. We have this trend line here from the low of September, connecting all those attempts to go below that trend line. This trend line provides dynamic support for prices, and once it's broken, prices should move to new lows. And according to our daily chart here, we see how the pair has formed a double top here, and also was rejected at the boundaries of this channel. So we expect it will be also possible that prices should move higher to again reach that upper boundaries of the channel, and then move lower in an impulsive manner to new lows. We see also how this double top was confirmed by divergence in the 14-period RSI, and thus our overall expectations for the broader trend are generally bearish. We're closely monitoring the pair in order to identify a good opportunity to go short. But until then, we believe that it is not wise to enter long despite the short-term bullish momentum of the pair. Moving let's take it like that. Because they are similar. Let's see the New Zealand dollar. What's going on here? It is pretty much a similar pattern. However, the wave 4 for the New Zealand dollar has finished a few months before uh, the Australian, and we count this decline as a 5-wave move to the downside, although a little bit tricky here with that uh, ABC correction, which also looks like a triangle, but it is not. And from here, we're counting this upside again. We see how this trend line here provides dynamic support. We have several overlapping waves, which which make it difficult to count these moves from here as an impulse to the upside. The prices have several times been rejected at the 78.6% Fibonacci retracement here of that last move to the downside. You can see how it was rejected once here, and now they are again at the same level here. Whether they will be rejected, we will see how this will happen. Also, as you can see, we have here some divergence forming in the RSI, but it seems that it has been broken from this recent upside. Overall, our general expectations for the pair are also bearish, much like with the Australian dollar. But we need a more decisive decline in impulsive manner to say that this count is correct, and we expect lower prices. If this actually happens, we would expect a new low lower than here, which was on August, on 24th of August 2015, and that's 6120. There is a lot of potential here, but in order to play it safe, we have to wait for a decisive decline, and the best of all would be a break of that dynamic support of that trend line that connects the recent lows here. Let's move on to the euro. Okay, again, we will open now the daily chart and see what's going on here. We have an enormous decline in the euro against the dollar since March 2014. We count these moves as 1, 2, 3, 4, 5. This wave 1, and then 1, 2, 3 here, and this is wave 4. Now, although very deep here, the correction for wave 4, this is actually what we believe is the correct count. And from here, we believe that prices will sooner or later move lower to new lows below that level of below that low of March 2015. If we move into lower time frame, the 4-hour chart, we can see how after the drop from the highs here, we have 1, 2, 3, 4, 5 for wave 1, and then WXY for wave 2. And this is 5-wave move down with an ED as a wave 5 to complete wave 3, and we count this as an A, B, C wave 4 correction completed. Thus, we're not sure yet about the internals of these moves, but we expect lower prices from here sooner or later. Today we have several important releases from the US, which may provide the incentive for traders to go long the dollar in general, because they didn't actually. The traders are concerned about closing positions due to the fact that the year is ending next week, and a lot of corporations are gonna and hedge funds are going to close their positions for the year for consolidating their balance sheets, and thus investors are reluctant to make any moves so far. But we believe that sooner or later they are gonna buy the dollar based on the information that the Federal Reserve has actually raised interest rates, and they have posted expectations about the US economy and therefore about the US dollar. If we go in much smaller degree here, we see how these waves here to the downside are pretty difficult to count them as a completed 5-wave move to the downside, because we have, let's say here, let's say that this is a 5-wave move to the downside, and then we probably have a choppy correction here with here was the release. We see how prices have created a large range. They moved in a large range, and since then we can also possibly count another 5 waves until here, and this could be in summary as 1, 2, 3, 4, 5 to complete wave 1 here, but it is probably too early to make such assumptions. It is difficult to have a good it is difficult to say whether this is the correct way to count it so far. We need a reaction to the downside to get some confidence into this count, but we see that when we put the Fibonacci retracement tool on this move, prices has been rejected at the 50% retracement, which is actually support and resistance, which is also a resistance zone. We see how prices have found difficulties to move around this level in the past, and it is also a round figure. It is the 109. We had an open position according to our signals of our website, according to our reports and alerts, with a stop loss at 109. Prices have actually bounced above that level and took out our stop loss order. So we're now waiting to see how prices will develop. Maybe we will see a bounce in a higher level around the 61.8 and then move lower. For now, the immediate momentum seems bullish. We see how in a 30-minute chart it has moved above the 70 the 70% area of the RSI, and we have no divergence formed here, so it is premature to make assumptions here. We have to wait for the price action to show us the correct path. We still have our broader expectations to be bearish for the pair, and we're waiting for more information to decide when exactly to go short the euro against the US dollar. We will inform you with an alert when we're ready, of course, so follow our reports and alerts on our website. Moving to the Great British Pound, we see how here the momentum is bearish, and it is strongly bearish. I'm gonna open the daily chart to see the a bigger picture here, and haven't updated this yet. Okay, we see how prices has been rejected at this trend line. To tell you, our expectations are that based on the weekly chart, excuse me, I'm gonna go here to show you first. We expect a new low here, as you can see, a new low which will go below this wave for a wave 5, and that will be rejected at this area here, which will provide strong support. Those lows here would provide strong support, and then this will complete wave B, and we will expect a wave C to much higher levels in the coming months. Since there are a lot of overlapping waves here, it is difficult to count this as an impulse to the downside. It will require to have several degrees of nested 1-2 waves, like 1-2, 1-2, 1-2, 1-2, which is usually not the case. We don't see it is. We rarely see such formations. So many different degrees of 1-2, 1-2 formations. So we believe that this is actually a nasty looking ending diagonal, and we have wave 1, ABC, ABC for wave 2, and then a triangle here for B, and wave C, which although it looks like an ABC, it can be counted fairly as a 5-wave move to the downside, and it completes wave 3. And here we have wave 4, and that we expect A, B, C that will move us below this level here, and it will be enough to go below 146.30 to accept this as a completed 5-wave move to the downside. So we may see sooner or later a bounce here, or we may firstly move lower and then we have a big bounce here that will be rejected around this level. This level will provide resistance, and then again another wave move to the downside to new lows before we go higher. We see also here how although the momentum is clearly bearish, prices are moving lower while the RSI is not, and that tells us a lot about the potential of this move to the downside to continue like that. It is also the time space in which this happens. We say that since September we have divergence forming in the 14 period RSI. Moving the 4-hour chart to see the internals, this is the strange looking impulse to the downside, 1, 2, 3, 4, 5, the downside, and here we have an ABC for 4, and as far as we can count here, we have 1, 2, and probably not even a 3, a third wave completed here. We see how the lower boundaries of this channel provide support for now, but once broken, they will provide resistance and prices should move lower from here. We're waiting for this to happen. We see how the momentum is preparing for a decline, and we are already with our existing report from this weekend. We are already short the pair. So that's pretty much all for the for the British pound, and we move on with the Canadian dollar. Of course, as you can see, this is an overstretch move to the upside, a move that we have warned our visitors, our friends, that it is going to happen. we expected the Canadian dollar to rally, and this is it will be necessary now to go even on the monthly chart to see what's going on. You can see how this move is so parabolic that sooner or later we have a decline here. We know that we will. And it is also on the monthly chart, it is forming here a divergence. So we can easily say from here that this top here, which coincides with this top, is wave 3, and this is wave 5. And if this is wave 5, we know that we should see a decline sooner or later that will drag prices to at least the low of wave 4, which was here at 119, 119, let's say, 119 figure. We'll go to the weekly chart to see what's going on. As you can see, we are expecting this wave 5 to finish, which will complete the wave Y to the upside, and then we expect a much larger decline after this happens, and this will coincide with our analysis for oil. Because after we have that fifth wave that we expect here, there also completed, the Canadian dollar should strengthen a bit. So we have 1, 2, 3, 4, and this is wave 5. Actually, we're in the fifth wave of wave 5. As we can see here from the monthly chart, this top here is providing resistance. It is 140 level. But due to the internals of the move, we expect higher prices than this, and thus we must look for a level that would provide resistance above that. We see how important it is, the 140 level. It was rejected here, it was support here, and it was resistance here also. This is a very important level for the Canadian dollar. And the next important level is this top here. As you can see how many times it was also important in the past, which is 142. So we have this target as our top target for the Canadian dollar in the coming weeks and months. In the weekly chart, we don't have anything else to see. Let's move to the daily chart. We put some Fibonacci expansion here, the Fibonacci projection extension, name it how you like it, from wave 1, from the length of wave 1 from wave 2, and we have already passed the 161.8%. and we're moving towards the 261.8, which is actually at the level that we are expecting, 142. We see clearly bullish momentum on the daily chart, and although it is starting to lose some momentum, when we have a cross between the 14 period RSI and the 9 period moving average of it, which is this red line. This red line is a moving average, a simple moving average of 9 periods of the RSI. When they cross here, we should be looking for a top here. Moving on the 4-hour chart, we see how we have a leading diagonal here, one. Excuse me. A complex correction to the downside for wave 2, and we can count for sure wave 1, 2, and probably a third wave of 3 here completed. And if this is the top of wave 3 and this is wave 4 is already developing, or it's already completed here, we can say for now, But we have this trend line that provides dynamic support for prices here, and we expect prices to find support here and move higher and be rejected at probably the 141 level or something like that to complete the fifth wave of 3, when then we will have a bigger correction, for wave 4 in parentheses, and that will be uh, when oil starts the bounce to the upside for wave 4. Those two instruments go together, so due to the connection and the, the degree that the Canadian economy is dependent to oil exports and energy products in general, so they move correct. They are highly correlated in a negative manner, though. So when actually this bounce occurs in oil, we expect um, the decline for wave 4 in the Canadian dollar. For now, we remain bullish, as our recent reports suggest. We have an open signal for this, an open position, let's say, for this long, and we're waiting to see how prices will develop in the coming days. Moving on to the Swiss franc. Here is my favorite, let's say, pair for 2016. If you have already read the report of this weekend of this week, um, we expect a very large bull trend to develop sooner or later in the Swiss franc. Although we are for now in a very important juncture. Let's go to the weekly chart to talk more about this. As you can see here, after let's go to the monthly chart. We have that enormous decline, multi-year decline, which starts from 2000, October 2000, and made low in 2011. This is an 11-year decline for this pair, and we believe that this decline will continue, but the correction that we're experiencing so far here is not completed. And although we see this pattern here, um, remember that this is a monthly chart, so this candle is still developing. It's not necessary that it will end like this. And we believe that this correction here, it is not finished. This resistance here, and here, which was super important, as we can see, prices moved lower from here, and then it provided resistance, moved even lower. Then we had an enormous bounce, and prices were rejected again here, and then were rejected again here. Here was the intervention from the Swiss National Bank, and prices are stubbornly trying to go above that level. We had a spike here, and then we rejected again, and finally we had an, let's say, decisive break above this level, and we believe that this bull trend is not finished. This is probably the biggest bear trap of the year. And let's show you why. When we see the weekly chart here, we see how here we have a complete wave 3 to the downside. I don't know, I don't want to go back for a lot. We're gonna show you. Let's say here is the end of wave 3, so we expect here wave 4, and we count this as an A, B, C for W, and this is an X, and thus we expect a wave Y to the upside. This is great resistance here, and this is what happened actually. Uh, Prices found a lot of resistance here, and the sell-off occurred after that. But it is proportionally, it is too short to be complete. If let's look at from many aspects. If this is actually wave W and this is wave X, there should be a connection between the size of wave W projected from the low of wave X to the upside. So also keep in mind that here was a time of that we very rarely experience in the forex market, but there was lack of liquidity in the global markets, and a lot of brokers may have very large spikes even to this level, but it is incorrect. The correct the correct price is around the 0.82 level. Some brokers may have, I have seen also a low below that, which is wrong, absolutely wrong. This is not correct price. So uh, if we project if we project this here from here, the size of wave W from X, we can see how the 100% projection is around the 114 level. Also, uh, we expect the wave Y to be in the form of an ABC. It looks like we have a 5-wave move to the upside for wave A and a triangle here for wave B, and we expect that the wave C that will unfold will be at least equal to wave A. What happened here is that prices were rejected at the 61.8% projection. This move from the low of wave B until here is 61.8% of this move, and it is quite unlikely that this will be the correct way to count the wave C here as completed. This is a great resistance level here, as we can see in the past. Several times prices were rejected or supported in the past at this level, and breaking this level will occur a very sharp rally, and this is what we expect to happen uh, in the coming sessions. We expect a rally up to this level, and once this is broken, a very sharp rally to the upside. The 100% projection of wave A from B is around the 106 level, but we believe that prices will move lower to find resistance at this important level here, 114, or approximately this level. This is a very strong resistance zone from 111 to 117, 115. It is also the upper boundaries of this channel. We know that corrections like to move within channels, and probably if this is the correct way to count, also the projection of wave 1 from 2, this sharp 2 wave, is around here, around the upper boundaries. So there are a lot of technical patterns that suggest that we should expect much higher prices for the Swissy. Going into the daily chart now, we see how after the rejection up here, prices have fallen sharply, but found increased very big support at the 61.8% retracement of this move, which was also a major support level, a major resistance level in the past. Excuse me, here you can see how it was resistant several times also here. This is also a round figure. It is the 0.98 figure, and we believe that prices will move high from here, providing a very good long opportunity for the pair right now. Moving to the 4-hour chart, uh, we can see the internals, how this trend line was broken and broken here, and then provided resistance and moved very sharply to the downside. Even if this counting here is not the best one, is not, it looks like an impulse to the downside, we believe that it will prove to be an ABC based on the higher time frames. And so far we have overlapping waves, but that may indicate several degrees of 1, 2, or even a leading diagonal that is forming. For now we have divergence here, and we expect prices to bounce soon. We have also issued today an alert to go long for the pair, but after this bounce here, but unfortunately we were fast to signal this alert, because prices return lower to take out our stop loss order and then move upwards, move up later. So now we are monitoring this pair very closely to see how this price action will continue here, and we will issue a new alert when certain conditions are met and we're ready to go long for the pair. So keep updated on our website. We'll go to the Japanese yen. And here we all know that the Japanese yen is one of the pairs that create a very strange looking pattern. For example, take a look at this pattern. It is a pair that is highly correlated to equities, and thus if we find a clue here for the direction of the price of this pair, we can make assumptions about the direction of the trend in equities with a very big degree of confidence. What happens here after this big decline? We had a very sharp bounce. Excuse me, I'm a little sick, and as you can hear my voice. We had a very sharp bounce, and prices were rejected at this very strong support resistance level. As you can see in the past, this area here around the 123.50 area is a major resistance level. We see a very sharp decline again here, but again prices have stopped here. We are monitoring the pair to see how this will develop. If it moves lower, we may have to reconsider this call count, but we will be waiting for a decisive bounce here to go long, because we believe that there is more upside potential based on this count on our daily chart and our weekly chart. As we can see here, there are forming several candlestick patterns here on the weekly chart, and prices are still within this bullish channel. So we expect sooner or later a very sharp bounce that will move prices around. Let's not be too optimistic, but we believe that we will reach the 130 area in the coming weeks and months. After all, we expect a wave 3 from here to occur, a break above this level, above this very strong resistance level, as you can see here, will signal a very significant rally for the pair. So monitoring the pair for now, we have dynamic support from this trend line, and when we are ready, we will issue an alert to inform you when we are ready to go long for to go long on this pair. Moving now to equity on the German DAX, the situation is much like the same. We had a failed alert today. We issued an alert to go long after this candlestick here happened, because we thought that this will be the beginning of wave 3. We were wrong, we were fast to signal this, but we believe that probably the if not already complete, wave 2 is going to be completed in today or tomorrow, and then we will move higher from here. We see here that on the daily chart the picture is very ugly for the German DAX. This declining trend line provides resistance, and prices were rejected several times here, although here we had a decisive break to the upside, provided support once here, but then moved again lower. A break above this trend line would signal that this count is the correct one, and that we're moving to new highs in the coming sections, and we actually believe that this is the case with DAX. Moving on, the S&P 500. Here we have. It is pretty much the same situation with DAX. Prices are moving sideways in wave 4. In wave 4, what we believe, and we actually believe that it is finished here, and that this is wave 1 and 2. We haven't already put them on the chart. Let's do it now. But it is a premature labeling. We are not sure yet that it is correct. We're still waiting to see how price will develop. We have divergence here for sure, that's what we know. And we need a more decisive bounce in the Japanese yen here in to signal a completion of this wave 4 on the S&P 500. That concludes pretty much everything in our analysis for all the 11 instruments that we cover. The video is a little bit lengthy, but we hope that you will enjoy it. Thank you very much, and see you soon.